Well, last Wednesday, when inflation came in at minus 0.2% for the March quarter, the odds of a rate cut tomorrow jumped to more than 50%. But that prospect faded today with a big rise in house prices in April, 1.7% and 2.4% for the month in Sydney. Now, here's a rundown of the annual changes for each capital city, and you can see that the boom in Melbourne and Sydney just keeps on going. 10% for the year in Melbourne and 9% in Sydney, with Perth and Darwin prices falling. For the country as a whole, the 7.3% annual rise was basically the same as the previous year, so consistent increases. Here's a chart of the four main cities. The median price in Sydney is approaching $1 million, yet prices there have accelerated again, which is amazing. And here's really why the RBA is unlikely to cut rates tomorrow. The bars on this chart represent the change in interest rates inverted. The line is the change in the household debt to income ratio, which by the way stands at nearly 200%, double what it was 20 years ago. So last year, in response to a 0.5% rate cut, that ratio jumped more than it did in 2009 when rates were cut 4%. Interest rates are now the blue touch paper on a firecracker. At one stage today, Westpac shares were down nearly 6%, but some buyers came back in the afternoon and have finished 3.5% lower. All the banks went down in response to Westpac's results, but Telstra jumped after saying it's going to cough up $1.5 billion to shareholders. Mining stocks went up because iron ore and coal prices jumped over the weekend, as did copper and gold. And finally, the Australian dollar is roughly steady tonight at just above 76 US cents. And that's finance.